Hi guys, how's everyone doing? I hope everyone is doing well, man. I'm back again with another video. We're just gonna be doing a quick rundown or recap on the week I've had with this challenge, right? As I promised, I'm gonna drop each and every single week just to give you an update on how the challenge is coming along. No matter how small of an activity that happened, or how big, or if even if nothing happened at all, I'm still gonna come here and report to y'all, you know. So what happened last week, it was just like one, two, three, four. I just took four trades, one of which was barely, it was just a break even. I'm not gonna lie, it was a break even. The GBP can't buy, which I analyzed and called in the previous video. If you didn't watch the previous video, I recommend you go watch it because this trade literally played out the way, but then I was just so blind, I guess, blinded by the fact that I had a target, and then I was also aiming for price to make higher highs that I was not really paying attention to the market sentiment or market behavior at the time. There might have been chances where I could have took my profit, but I didn't because I was just so focused on this, you know, on this target that I had. So took the trade. I didn't make much. Then I took another one. I made an $18 loss. Took another one, made profit, and then I took a gold trade, on Friday, on right before NFP, and things played out well. Could have made more, but I didn't because I was skeptical. You guys know I don't trade NFP, but then if I see an opportunity around that time zone, I'm gonna make sure that I'm protected through the NFP if I'm in a trade before NFP. So with the GBP cat, this is what the trade looked like. I was aiming. If you didn't watch my previous video, I recommend you go watch it now. As you know, because the higher high and higher low were broken, and I was like, okay, this wave is holding because the higher high was broken to the upside, right? So whatever price comes to do here, as long as it's respecting the higher low, I mean, we've seen the fake out, right? And then price came around this zone again, the high low zone, and then it reacted positively to this zone. That's where I entered my buys. I was aiming for a huge reward here, 5.79. Imagine, right? Had I had I had I stuck to more realistic, a more realistic reward like 1:2, I would have took my profit at its peak, right? But I didn't do that for some reason because I thought I knew it all, right? So I got humbled, price reversed before getting to it didn't even go any further. Price reversed, and then by this time I had my TP at, not TP, my SL at entry to break even, but then I didn't even wait for that. I was like, you know what, this doesn't no longer yield the results that I was hoping for, so let me just close. So that's hence I closed at $6. I'm gonna show you the screen recordings, guys, just so you can see what it looked like. And then the second trade that I took was a sell around this area. And then looking back, I would say what pushed me to take the trade was the fact that I see the dynamic of the manipulation in this case. I mean, we are playing around the higher low area. We disrespected it multiple times, so we obviously know that the sentiment is bearish. But then because we need the liquidity to go make lower prices, we need buyers. We need to liquidate all the buyers here, right? We need to liquidate everything that is here just so we can drop. So that's how this pattern formed on this trend line. I mean, we had our first touch here, second touch, we broke out. The retest looked convincing, but then obviously there was buyers who entered based on this retest, the yellow area. You see this area, yellow bordered candle. After that retest, people entered. Obviously, there was a good number of buyers who entered. And then I was like, you know what? I'm gonna take my sells right where a lot of buyers are gonna take, or they're gonna put their buy orders. Because obviously, if they're watching the break and retest of this line, they'll wait for the retest and then orders here to go with price to the upside, right? But then, not knowing that I'm also myself entering too early, because this manipulation is not enough, even though I was like, okay, I have a lower high, a mini lower high, mini lower low, which I falsely labeled, because if you look properly, this is not the holding lower high, lower low, because this lower low is not broken yet, right? The holding lower high and lower low at the time was actually this one, right? It was actually this right here. So, but then I was just too cocky, and for some reason I thought the lower high and lower low, this one right here was the one that's holding, and that I was at fault for it, you know. So this inch was really meant to be up there if I really wanted to catch it, but then I caught it too soon, because I caught it under the false analysis of this being the lower high and lower up. Hopefully you guys get me. So it went from that. Obviously I got stopped out, but then I risked, how much did I think I risked 0.25, I think 0.25 on the trade, or 0.5, 0.50, yeah, 0.50. So I was meant to lose $25, but then I closed it before that, right? Which is cool, which is totally fine. I'm willing to take losses like this, you know, as long as it's a small manageable loss. It's okay, it's part of trading. But then on Friday, what happened was I saw an opportunity again, right? I saw another opportunity to take sales. I was like, okay, there's a mini pattern that I'm familiar with that formed here, a raising wedge, and this candle right here is telling me everything I need to know. This, the last bullish candle before the drop, is telling me everything I need to know, and it was early in the morning. It was a 7 a.m. Candle, and I entered on the 8 a.m. Open. I entered, and my stop loss was right above this high, because I looked at this as a double top. This zone as a double top right here. You know, I entered on the basis that this is a double top, and the price is bearish, and I would be invalidated if price even makes it to this area, because that would no longer be a double top, right? So I entered a sell, and I was holding right before I think I closed right before, it was not even right before NFP, but then I closed as soon as price got here and reacted funny. You know, I remember that there's like a young support zone here, like it or not, you know, and it could hold. And the last thing I want is for me to or end up closing losses or small profits like the previous trade, just because I wanted to hold for the longest time, you know. So the psychology part is very important, guys. You know, it's not only about closing early or having a stop loss or reverse trading, even small things like this, to say, okay, this time I'm not even trusting myself, even though I have, like, you know, a solid, you know, I have a solid pattern, I have a solid entry, you know, reason, you know, but then and a low risk entry at that, because I have a well-defined stop loss. I really wanted to aim for this zone right here initially, right? But because I understood that it carried, or it held previously as a support, but then I had PTSD of this trade now, to say, what if I try to hold until here, plus this NFP coming up, price doesn't get here, it reverses somewhere here. So as soon as I saw this impulsive move to the downside, and price that started reacting you know, funny when it got here, I was like, you know what, I'm gonna close here and stay out the way, right? I mean, right now, if you're watching closely, you see that there's a trade forming. There's a trade forming right now. You know, I'm breaking down the trades that I took last week, and then I randomly ran into a signal. This is GBP CAD. Look for sales around this area. You know, have your stop loss above the previous high, and write it out or whatever. But then, yeah, at your own you know, discretion. But yeah, that's what happened with the GBP CAD. As for the gold, the gold was also simple. It was a pattern. It was a conventional pattern that everybody knows, right? But then with me, my analysis was a bit different, because I mean, gold has been the talk of the top. It has been the topic of discussion last week, because of the high it made out of nowhere, you know. This high surprised a lot of people. It shocked a lot of people in the markets. I'm not pretty sure about the fundamental principle behind the spike up, but it happened, right? It happened. Not a lot of people are prepared for it. But then after that, obviously, we saw pure reversal of whatever happened. And then if you look at this continuation pattern, you will see that it has some it has some similarities with the one with the pattern that I was trading. You will look at what I look at is like the spikes that the spikes that have potential to take you out, the stop hands, pretty much to make it simple for everybody to understand. So if you didn't catch this high and then you entered after the spike thinking everything is sweet, there's always the second spike that's gonna shake you up or take you out, So the first cycle is the first spike, the second one is to take you out. So I looked at this, I was like, okay, and all this happens after an impulsive move to the downside. So this is a correction, right? After an impulsive move. So on a smaller scale, I looked at this impulsive move to the downside and I was like, okay, if we look at this impulsive move, what is the equivalent spike or stop hand for this move that is equivalent to the previous one that happened? Even though like every move and outcome in the market is unique, sometimes you just have to, be prepared for whatever is about to happen, don't be stopped up. Right. So this is what I used. I was like, okay, this was the high that was created, or the most suitable entry point, or the highest high. If you were to catch it here, that's a perfect sniper. But then after that, obviously you would chill and think, okay, price is now ready to go to the downside. But then there's gonna be another spike according to this price action right here. There's gonna be another spike that's gonna shake you up before the actual drop happens. So I entered on this candle pretty funny enough. I entered on the second spike candle, but then my entry was right here, the way it's stipulated on the chart. And I had my stop loss right above the previous spike, right? Or the previous high. Held that, and then yeah, price played out perfectly. I mean, look at this chart. This chart this pattern played out perfectly, man. It's not, too often you see price play out like this during the year when there's real money. Like you get destroyed for no reason, even when a pattern is looking this perfect. But anyways, also with this one, my initial take profit was somewhere here to aim for a 2+ risk to reward. But because I was like, I understood that there's NFP coming up, and NFP is very, hey, it's very vicious. Might spike to the direction to a direction, and then you think you're good, and then it reverses. Anything is possible with NFP pretty much. So I was like, let me just take my profit at the most probable zone that NFP is gonna come to, or whatever price is gonna come to, with this NFP happening and everything. So to me, that zone was this TP right here. Even though I could have milked it even more, my aim entering this trade was not even to trade NFP, so taking that into account to say, I want to stay out the way. I don't want to be caught up with the NFP or whatever. I don't know what's going to happen. Trading NFP is like gambling because anything could really happen, right? So I was like, I'm just going to stay out the way, considering that this is a long-standing trend line. First touch, second touch. This could have been the third touch before price continued to the upside. So my TP was placed strategically. And yeah, my TP was hit. Even though I didn't make much, it was still something. So yeah, that's what happened last week, guys. Nothing much, nothing crazy. I wish I would have came back to say, look, I passed my account, but it was not that, right? It was not that. But then are we making steady growth? 6.75%. So I'm left with 1.25%, I guess. I'm left with 1.25% to pass this challenge. And this is what my curve is looking like. And it's pretty decent. I understand that right now it's not the best time to trade, or it's not the best market conditions. during December, because the liquidity is quite, it's quite jumpy. It's not as stable as during the year. The money that is in the markets is not, even if you look it up right now to check the volume, the difference in volume, like the volume right now compared to the volume during the year is different. So I'm gonna take it as easy as possible, take it slow, take it a day at a time, and hopefully we get to pass the challenge by, or pass the phase, because I'm taking it one step at a time. Pass the first phase by Jan or some shit like that, you know. But then I'm not rushing anything, because I understand what rushing could do to this curve and my progress. So yeah, that's all I have, guys. Um, I don't know. I don't want this video to be too long. If you got to this part of the video, I really appreciate you. Hopefully you get some value from all these videos, this series. Hopefully you relate to some of the stuff that I go through, and I am open enough to let you in on. Hopefully everything is well, man, and you're also trading according to your own pace, and you're following your rules, and you know you are refining your skill in the midst of everything, man, because that's all it is. When you look back at this period, you're gonna be like, man, I done came a long way. It's been a long journey, but then I learned a lot. I'm not the same trader as I was last year or last month or last week, whatever it is. As long as there's progress, we are moving forward. We are growing. So yeah, appreciate you guys for watching this video. Please do not forget to subscribe, like, comment. Tell me what you think in the comment section. My comment section are so empty. It's boring, because it's like, am I talking shit? Nobody's fucking with my shit. Not that I give a fuck, but like, there's no interaction whatsoever. I'm not rushing it, but if there's nothing to say, it's cool. Just like and move on, and subscribe, and yeah, do all that good stuff. It doesn't cost anything. So yeah, that's it from me, guys. I appreciate y'all.